Hey everybody, Kimo Sabi here. Getting a breakdown. So lost that stop loss, and as soon as you went there, you went for those lower liquidities. Now you did grab the liquidity. So you're getting into these regions over here. We do have this liquidity taken. We have a potential completion of a move here. We will see, but pay attention to where your supports have been in the past. Those are likely to act as support again. So what you want to see is a change in behavior out of here, i.e. get back above like 92,000 and hold this area for a nice push up. And this could be slow and steady to kind of push back up if it wants to. Um, but it can certainly just fall out of bed here, and this would have been distribution. But this doesn't look overall that bad. I was recounting my Elliott wave that I had, contemplating this as the peak of wave 3, but now that the price action is kind of playing out, I'm contemplating the current all-time high is wave 3, and this has been a wave 4, back down to wave 4 of lesser degree. Now you could pop up for wave 5. I think in the macro, this looks more like a distribution now, and you're just missing an upthrust. The reason that I'm kind of contemplating that is the Fibonacci retracement prior to the breakout upwards of the previous range to current all-time high, looking at the retracements, and you just came down to a 0.5 Fibonacci retrace and had a bounce, a little bounce. We'll see if that bounce amounts to anything, but that is a common retrace for a wave 4. You see the first leg down came to the 382, bounced, and we played in this area, kind of finding support on the 382 for a while before breaking down to the 0.5. That's very common to do in Elliott wave theory. And let me zoom out to an 8-hour chart, and then we can have a count on it. So we've got the 8-hour chart here. We have the entire rally from the lows to up higher here. And this I was originally counting as some kind of leading diagonal. 1, 2, 3, 4, 5 to a very, very shallow wave 2 to a wave 3. And now retracing back for a potential wave 4, it came to a common fib retrace from the breakout and pulling back from all-time high. Retrace 50%. We'll see if that holds. You already did grab liquidity, like I said. So maybe this is the spot. We will see, but we'll get a change in behavior there. Let's pull up some Elliott wave counting. So you'd have a potential for a 1, 2, and then inside of here is like a 1, 2, 3-ish here, and this is wave 4, wave 5 in the third wave. This would be your wave 4, and then you're looking to push up for a wave 5. That should go 618 of waves 1 plus 3. So let's get that measurement on there. Measuring from the low to the current all-time high, projecting from this proposed wave 4, gives you a wave 5 target of 126 currently. So let's see if that Elliott wave structure plays out. No rush to get into this just yet. You may want to try to catch a falling knife here, but I would go very, very easy on it until you start reclaiming some levels. Along with that Elliott wave count, let's take a rectangle, we'll draw on top of our current range, and we will get a projection of an upthrust after distribution, which would be right in line with that 618 at 126. It may be as low as 123, and that may top out the market for a while. I would at least be open to that. I mean, maybe we do have the weekly cycle low and double, and we have a rally that goes way further. But I would have liked to see price remain stronger in this area and not revisit the lows. However, price coming back down to the lows kind of tells you that this was big selling going on in here, and now you're going to upthrust after the distribution. So I would watch for a swing failure pattern getting up to 120 and then closing below this range. that would definitely mark your top, and I would be willing to short that for a while. That's assuming that this thing even does bounce. We don't know yet. So let's take off some of these drawings and zoom into our current range. And this is very, very down, down, down price action. But you do have some similarities with what was going on before with what is going on now. And we can draw that out. So from the highs, you had some kind of consolidation, drop, and pop back up for the capitulation down. And this, you had some kind of similar thing, pop up, and then capitulation down. So that does look like an A, B, C of some sort, some kind of three wave that is around about completing. I wanted to see a little bit lower, but I might not get it. But I'm not really concerned with how low it goes. I'm concerned with bouncing back. In my opinion, if this is going to start to be bullish out of this area, I would expect it to bounce back up to 95 and then chop in this range for a while before breaking out, maybe getting into this upper range. It might just take all of these ranges before it makes another all-time high. It might take a while. I would also be open to this falling down a little further and maybe making this pattern, repeating this pattern here for a little push down. 87.5 has been my target for a while, but we definitely don't have to reach the 87.5. Like I said, that was a 0.5 fib trace of wave 3, so that can be complete right there. But out of there, you need to see some kind of change of behavior. So I do want to see this bounce up a larger leg than this. So it needs to reclaim this range, probably hit its head on previous support that should act as resistance, at least in the short term. So you may get this chop for a while before breaking out. Or you would have what is called a show of strength where it just goes straight up. If that happens, that's actually really bullish. And it may not, this would look like a reaccumulation range in that scenario, where this would be a show of strength. And then I could potentially see higher targets, 150, 160, 180, 180,000 on this. But my expectation is to be more conservative with my targets if they end up happening. So it's going to bounce if it does bounce. If it doesn't bounce, then this is going to find resistance below the range and markdown will start happening. So you don't want to jump the gun until you start reclaiming some levels. And if you divide up the range, that's your first level to reclaim, and then you want to reclaim that as support, and then you want to back test 100,000 as support, and then get up into this upper range up here before breaking out. So it can take time. There's plenty of trades to be had. There's no reason to rush into it. And even if price was to come here and just bounce right up there, well, that's buying an all-time high. As long as it holds above the range, you can buy that and trade it up. As long as you know how to manage risk off of it. I mean, a break of the range lows here, that's kind of the moment we've all been waiting for. And now we finally get it. So now that we have it, we know that if this bounces back up, we know to manage risk off of that low. Any break back up inside there and a breakdown below that and continuation, it's not looking good for things. So you want to see some strength come out of here somewhat, at least reclaim the range, play this out a little bit, or get up to 100,000 and play this range out, and then find support at 91 before breaking out. But we'll take it one day at a time as things come. But that's my thoughts for now: is don't rush in. I know there's some people that I've seen already opening up long positions, like, oh, this looks good to me, without any change in behavior. So this can flag out here and have another hit down, unless if it starts reclaiming 95, back test that as support. It's probably going to back test supports a lot, and then break out from that descending trend line that we got going on. So that's what I'm watching for. Looking for a bounce, looking for a place to manage risk from, where I can place my stop, keep it tight so I can have a good night.